So let's start at the top of the ladder, totaling up the income, and figure out some ways that having a little pre-planning can help us in 2025. And one of the first things that I would encourage you to do is to take your income before we consider any deductions and things of that nature and just figure out your marginal tax bracket. Your marginal tax bracket is the rate at which the highest portion of your earnings will be taxed. So, for example, let's say if you're looking on screen, we're looking at the tax brackets for 2025. We're going to assume that we have a couple that makes $250,000 combined. If you're looking at the federal tax brackets, you'll see that in 2025, that makes their marginal tax rate 24%. And to me, that's valuable to know because it gives you an idea of how valuable any deductions that we find might be. What does that mean? Well, let's say that this couple makes $250,000 and they decide to put $10,000 into their 401ks and their IRAs. $10,000 in pre-tax retirement contributions reduces the income on which they pay taxes by $10,000. Well, if we know that the highest portion of their income is taxed at 24%, their marginal tax bracket, then we also know that by reducing their taxable income $10,000, they are saving $2,400 in taxes. It gives you an idea of just how powerful certain deductions may be, so that if you're deciding between making certain retirement contributions in terms of the amount, or if you're deciding between making a pre-tax retirement contribution, which helps reduce your taxable income, versus a Roth retirement contribution, which does not, those are the types of things that you can know by looking at your marginal tax bracket.